Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning breakfast, coffee or tea, and let's enjoy today's episode.
Welcome to the deep dive. Trying to figure out what's really going on with the economy, it always feels a bit like taking its pulse, doesn't it?
It really does. And a huge part of that pulse, maybe the main part, is consumer sentiment.
Exactly. How people are actually feeling about, their wallets, their jobs, what's coming next. So for our deep dive today, what's the latest read from Florida? What's the pulse check there?
Yeah, that's exactly what we're going to unpack. We've got the latest Florida Consumer Sentiment Report. This one's from the University of Florida.
Okay.
And our mission, really, is to cut through the headlines, figure out what's driving these numbers, where the real optimism is.
And maybe where it isn't.
And where the caution still lies. Absolutely. Basically, give you a shortcut to understanding the economic mood down there.
All right, let's get into it. The headline number. It definitely caught my eye. Florida Consumer Sentiment, it climbed again in June. Second month in a row.
That's right. It ticked up 3.1 points, landing at 84.1.
And that's up from a revised 81 in May, right?
Exactly.
Yeah.
And it's worth noting, national sentiment jumped pretty sharply, too, so there's a broader trend.
But here's the bit I found really interesting. For the second month straight, all 5 parts of the index went up.
Yes. That's quite telling.
That feels significant, not something you see every day.
It really isn't. When all 5 components move together like that, it suggests something maybe more broad-based is happening, even if it's still, a bit tentative.
Right, and that 84.1 number.
Yeah.
How should we think about that? Is that good, bad, middling?
Well, context helps. The index UF uses, it's benchmarked way back to 1966. So 100 is the confidence level then.
Okay.
The scale runs from 2 to 150. So 84.1, it's definitely below that 66 level.
Still below the baseline.
Still below baseline, but the key thing is that direction. Everything moving up 2 months running, that points towards some momentum building.
Okay, so momentum, a broad upswing. But what's the engine here? What's really pushing that number up? I bet it's not equal across the board.
You are absolutely right. And this is where it gets fascinating. While everything improved, the main gain, the report says, is, quote, driven more by Floridians' assessments of their personal finances. That's a quote from Hector Sandoval. He directs the economic analysis program there at UF.
So it's about their money, how they feel about their own situation right now.
Primarily, yes.
Yeah.
It seems to be hitting closer to home first.
Okay, so their wallets feeling a bit better, maybe more secure. Can we dig into the specifics? How big were these jumps for personal finances?
Yeah, the biggest gain was actually how people felt about their personal financial situation compared to a year ago. That jumped almost 6 points.
Wow, 5.6 points. That's substantial.
It really is. It shows people are feeling a tangible improvement in their immediate situation versus the recent past.
And it's not just looking back, right? What about spending now?
Good point. We also saw a pretty decent jump in views on whether now is a good time to buy a big-ticket item.
Like a fridge or furniture, that kind of thing?
Exactly. That went up nearly 4 points.
Yeah.
So people who are feeling a bit more comfortable maybe opening their wallets for larger purchases right now.
Okay, that sounds pretty positive and maybe widespread, but I remember seeing a little wrinkle in the data.
Yes. The demographic differences.
Right. While these positive feelings about current finances were pretty broad, there was an exception. People younger than 60. They apparently had more negative views about specifically their spending intentions. What's going on there? Is it generational or something else?
That's a really important nuance. It suggests maybe different pressures. Younger people, perhaps they're dealing more with student debt or higher housing costs relative to income.
Right, things that make you pause before a big purchase.
Exactly. Even if their income feels okay month to month, that hesitancy about large expenses might linger more for them.
That makes a lot of sense.
Okay.
So current finances, mostly positive with that younger demographic caveat. What about looking ahead, the future outlook?
Also improved, but again, with some important asterisks.
Always asterisks.
Always. So expectations for personal finances a year from now. They saw a decent bump, up 2 points.
Okay.
Views on the overall U.S. economy over the next year, those were up almost 3 points.
Right.
And even the 5-year outlook edged up a little, about 1.4 points. So there's a general sense maybe that things might keep getting better, or at least hold steady.
Here comes another demographic split, right? I remember seeing something about income levels.
You got it. While that future optimism was fairly widespread,
Yeah.
people earning under $50,000 a year, they consistently reported more negative views.
Across all three of those future questions.
Across all three. So yeah, you've got this pattern. Younger folks more cautious about spending now, lower income folks more cautious about the future.
Is there a common thread? Or are these separate pockets of worry?
Well, it points to what Sandoval emphasizes as a key takeaway. Despite the recent climbs, expectations about the future economy, they're still below the highs we saw back in January.
Okay. So the recovery in sentiment isn't complete.
Not yet. People are still cautious. And Sandoval pins a lot of that lingering caution on ongoing uncertainties, especially around trade policy.
Trade policy again. That just keeps coming up.
Casts a long shadow. And you can see how for lower-income households, things like trade disputes impacting jobs or prices, that feels like a much more direct threat, perhaps, making them more wary about the future.
Yeah, that clicks. It's tough to feel totally secure when those big, unpredictable factors are out there. So, stepping back from just sentiment, what about the broader economy? Does the report paint a picture of stability or...
Generally, yes. It notes a period of stability, particularly after the first few months of those tariffs being implemented. The labor market is still highlighted as strong, historically low unemployment.
Which we keep hearing about.
Right. And inflation. Well, it's described as modest, but it has been ticking slightly above the Fed's 2% target recently, so that's something to watch.
And the Fed itself, how are they reacting? Holding steady?
Pretty much. They kept interest rates the same for the fourth meeting in a row back in June.
Right.
And they specifically called out that uncertainty, saying, quote, "The effects of tariffs on inflation remain uncertain. Their caution mirrors the consumer caution, really."
But wasn't there some conflicting data point? Something about actual spending?
Yes, the counterpoint. Crucial piece. The latest figures from the Bureau of Economic Analysis actually showed weaker consumer spending in May.
Weaker spending even as sentiment was trying to climb.
Exactly. Which suggests that this continued policy uncertainty, as the report puts it, might actually be starting to bite into what people do, not just how they feel.
So sentiment is one thing, but actual behavior might be lagging or even heading the other way because of things like trade worries.
It certainly seems plausible. Sandoval specifically mentioned new tariff threats popping up, even highlighting the recent breakdown in trade talks with Canada.
Just adding to the uncertainty pile?
Precisely.
Yeah.
He made an interesting observation, too, that maybe the back-and-forth nature of trade policy is making consumers a bit less reactive to each new headline.
Like getting used to the noise?
Sort of. But he warns that underlying continued uncertainty could still weigh on confidence. And the bottom line remains, despite the recent upticks, overall confidence remains below the levels seen at the start of the year.
Yeah.
We're not back to where we were in January.
It's definitely a mixed bag. Feeling better personally, but worried about the big picture. And maybe spending less despite feeling a bit better.
It's complex.
Which makes you wonder, how do they even capture this? How reliable are these sentiment numbers? How does UF actually do this survey?
That's a fair question. The methodology matters. This particular survey ran from May 1st to June 26th.
Okay, a decent window.
Yeah. And they gathered responses from 480 people. It was a mix of about 213 on cell phones and 267 through an online panel.
So reaching people in different ways.
Right, trying to get a representative cross-section of Floridians.
And how do they make sure that mix of 480 people actually looks like Florida as a whole?
Yeah.
Or just say older folks or people in cities?
Great point. They use weighting. The raw data is adjusted based on things like the county the person lives in, their age group, their sex.
Using official population data.
Exactly. Using official estimates to make sure the final sample mirrors the actual demographics of Florida. Plus, they have quality controls, checking for weird answers, bots online, that kind of thing.
So they take steps to make it robust.
They do. It's designed to have a reliable snapshot.
Okay, so let's try and wrap this up for you, our listener. We've dived into the numbers, the different feelings among different groups, the whole economic backdrop. The clear positive seems to be Floridians feeling better about their own money, their personal situation right now.
Definitely the main takeaway on the upside.
But underneath that, there's this persistent hum, this caution about the bigger stuff. Trade wars, inflation, and just general global wobbles.
Right. That future outlook is still pretty cloudy for many.
Which leaves us with a really interesting question, I think. We've got 2 months now of rising sentiment. Is this Floridians just kind of adapting, learning to live with the uncertainty.
Or is it the start of something more, a real sustained shift back towards stronger confidence?
Yeah. And what should you be watching for? What signs, maybe specific economic numbers or policy shifts, might tell us in the next few months which way this Florida story is actually heading? Something to think about.
Well, that wraps up today's episode of Reality Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.